The following program sponsored by Adams Financial Concepts.
About money, a different approach to investing you won't hear anywhere else. Your host, Mike Adams, is a registered investment advisor and works with investment portfolios exceeding over $100,000 in net worth, and has a proven track record of managing long-term investments surpassing the markets in the long term. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's Mike.
And it's Friday, and we're going to be talking about money. You know, the market has started off this year. It's the worst start to a year in history. The Dow is down more, the Standard & Poor's is down more, NASDAQ is down more than it has happened any time in history. And that has a lot of people worried. A lot of people thinking, what's going to happen? You know, there's a lot of memories of 2008, and that is a concern. Very often when the first week is up instead of down, 35 out of 41 years, 85% of the time when the first week of January is up, the Dow is up for the year, 85% of the time. And very often when the first week is down, the year ends up down. Now it's less than it is on the up times. Only 13 out of 24 years have been down when the first week in January is down. So it's less predictable. And given all that's going on with the memories of 2008, there's a lot of concern about what's going to happen this year. It's not 2008. There's a lot of differences. And I think a lot of things are misunderstood in the market today. We're going to be talking about that. In previous programs, I talked about China and emerging markets, which are in a bear market, junk bonds, which are in a bear market, REITs, which are in a bear market, commodities, which are in a bear market, gold, which is in a bear market, oil, which is in a bear market, private equity and hedge funds, all those things which are really under a lot of pressure. But as I talked about in previous programs, I believe those are all symptoms. They're symptoms of a buildup in credit and capacity building, overbuilding, so that there's an overcapacity of production of steel, of aluminum, of copper. There's an overproduction of oil. There's an overproduction of many commodities. And the problem is the credit bubble burst, and now we're seeing the effects of that. The problem's not going to go away. It's going to take 3 to 5 years for this to happen. It's going to be specific to those areas. I believe that consumers will benefit with lower prices, consumers in the U.S. anyway. Companies will benefit, except in those industries which are really being related to the credit time. But I believe there's a lot of fear now. But it's not 2008. I still believe that the super cycle that I've talked about so often is still intact. 1870 to 1930 was the first super cycle that was identified by Standard Chartered Bank. That super cycle was driven by the industrialization of the United States, but it had some serious impact on agriculture, some serious negative impact. That's part of what goes on in a super cycle. Part of the economy does well, part of it does not do well. That's part of the super cycle. If everything was doing fine, you wouldn't really have the kind of growth we're going to see. The big items today, and have been for the start of the year, have been China and oil. So I thought it makes sense to talk about China and oil. You know, if you listen to CNBC and the news, or you read some of the magazines, they talk about supply and demand, and suddenly the demand has disappeared. They talk about all this supply, but the demand has disappeared. And because demand has disappeared, oil has dropped below $30 a barrel, dropped to $29. I remember a time not too many years ago, in the summer of 2008, oil was at $157 a barrel. Remember that? That wasn't that long ago. $157 a barrel. Today it's selling for $29 and change. You know, but back in those times, the estimates were that 50% of the futures contracts, those contracts for buying oil at some future date, over 50% of those contracts were paper contracts. They were speculative. People were speculating on price and price increases, but there was no intent of ever taking delivery. Back in those times, I remember reading about 10 ships that were at sea and nowhere to offload their oil because even though people had contracts, they had no intention of ever taking that oil. But it's not just oil. It's commodities in general, hedge funds, mutual funds. And financial planners were all talking about commodities as a new asset class or an old asset class that needed to go into portfolios. It seemed like there was a huge demand, and you had all this money being transferred out of stocks, out of bonds, into this asset class of commodities. And it seemed like the demand was there, but it was really froth. It wasn't real. They were futures contracts. Some futures contracts are really valid and straightforward. Airlines, when oil prices were going up, were buying oil to take delivery a year or 2 years from then. Buy it at today's price, pay the price. You don't have to pay the price that it was going to be in a year or 2 years. Made sense to do. People were buying gold on futures contracts. People were buying copper. They were buying aluminum. They were buying steel, buying at today's price to take delivery a year from now. But the airlines, the jewelers, they were buying it on the futures contracts with every intention of taking delivery. But there were so many contracts that were signed, and with prices rising like they were, people wanted to take advantage of that. When you look at commodities contract, they were so highly leveraged. They only had to put up maybe 5% equity. So when the price was going up, you got huge leverage. To illustrate that, if you buy a contract, a $100,000 contract, you might only have to put in $5,000. You could borrow $95,000. And if the price increased just 10%, from $100,000 to $110,000 on that contract, you could pay off your $95,000 and have a $15,000 profit, which was tripling your money. With that kind of leverage and that kind of market, it seemed to make so much sense for the profits to come in. And when things are going up, it's wonderful. It's when things go down, it's not so wonderful. That $100,000 contract, if it sinks 5%, you're wiped out. If it sinks 10%, not only are you wiped out, you owe another $5,000. So where do you get the other $5,000? You reach into other contracts, and you have to sell those to cover the contract that went down. So when oil prices were dropping down, they had to sell other commodities as well. So oil, I believe, was the catalyst for the commodities drop that happened. I mentioned the book, Oil Kings, written by Andrew Scott Cooper. He talked about the information, or the book was based on the Freedom of Information Act about the Nixon and Kissinger years and the Shah of Iran. The Shah wanted to rebuild the Persian Empire. Nixon and Kissinger wanted Iran to be our ally in the Middle East. They wanted that to be a buffer against the USSR, and they wanted it to be our ally in the Middle East. The Shah needed to buy military equipment, and Kissinger and Nixon negotiated backdoor negotiations. Nothing was ever public. They negotiated contracts to buy oil, and the Shah wanted more than he could afford with the current price, so they allowed him to raise the price. We used to think at that time it was OPEC that pushed prices up. We didn't realize that it was Nixon, Kissinger, and the Shah that had that. And it wasn't until we started to resist that OPEC really got involved. But with oil prices being negotiated, it seems that that's what happened this time around. Russia, when they invaded the Ukraine, we wanted to sanction them. Russia's 50% of their revenue, government revenues, are from taxes and 50% oil and gas. At the same time, you had ISIS that was growing, and one of their main revenues was oil. So it made sense for the West to sanction Russia by pushing oil prices down, and for those producing nations in the Middle East to push prices down to damage ISIS. But nobody expected what happened to happen. When oil prices came plunging down, it brought commodities down. But that's only part of the issue. Back in the 1990s, the 2000s, because of all those contracts that were out, it looked like there was a huge amount of demand. And you had all that speculation going on, and to meet what looked like was real demand, you began to get investment going into building plants and equipment and facilities. There was $2 trillion invested in China and India alone to build new factories to meet that demand. And the oil drillers, there was $6 trillion invested in the Australian outback, in North Dakota and Brazil's coastal region, because oil prices were only going to rise at that time. That was the belief. $6 trillion in oil alone, $2 trillion in factories in India and China. That's the fact of capacity increasing far more than demand was. That means that today, as oil prices drop, there's an excess of supply over demand. That's what's going on now. We're coming to a commercial break. Don't go away, because I want to finish this, and you also want to hear my guest. Completely different subject, but we'll be back and talk about China as well. Stay tuned.
About Money with Mike Adams will resume in a moment on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Lots of people manage investment portfolios. Just a few can manage a successful portfolio and provide exceedingly great service to their clients. Here's Mike Adams from Adams Financial Concepts.
We believe the price you pay should be based on the performance of your portfolio and the quality of service you receive.
You know, Mike, it seems that a lot of companies subscribe to the one-size-fits-all mentality of investing. Does one size really fit all?
Not with us. Every portfolio that we manage is customized to fit each particular client's objectives and risk tolerance. We place our clients' interests first in all portfolio decisions.
If you're looking for a home for your seven-figure plus investment portfolio, call Mike Adams of Adams Financial Concepts, specializing in creating and maintaining wealth for over 20 years. 206-903-1019. That's 206-903-1019. Or log on to adamsfinancialconcepts.com.
We're back with more about money. For details on what you hear on today's show, visit adamsfinancialconcepts.com. Now, here again is Mike Adams.
So I've been talking about this whole market situation with oil, with China, and I'll get to China in the latter half. But as we talked about, oil prices were coming down. It was a lot based on the speculation that happened back in the 1990s and the 2000s, the people that signed forward contracts intending to take advantage of the price, not wanting the material delivered at all, the oil delivered at all. They were price speculating, and when all that began to collapse, it brought down commodities completely. But in order to meet what they thought was demand, huge amounts of money went into building factories and oil drilling. $2 trillion into factories in China and India alone to meet the demand for aluminum and copper and steel. China's steel production quadrupled between 2000 and 2015. There's an excess of 600 million tons of producing capacity, more than real demand in the world today. And you have steel mills shutting down in Scotland. And I would imagine we'll see steel mills shutting down in this country as well. Aluminum facilities. I started my career at Intaco Aluminum up in Ferndale, Washington. And Alcoa bought that a few years ago. They're shutting down the pot lines and the production part because there's a 23% excess aluminum production capacity in the world. They're able to buy aluminum cheaper and bring it in, transport it in, to run it through the cast house at Intaco in Ferndale. That's been happening. And that's where we are. For us, for the consumer, it's a positive. For companies here, it's a positive. But there's a lot of money that was spent. I mentioned $6 trillion to do the drilling in the Australian outback, that drilling that went on in North Dakota and Brazil's coastal waters. $6 trillion. Overcapacity. And the result is similar to what we saw with housing. Remember the housing crisis? It started with the subprime mortgages, but it extended all the way across. And through that crisis, there were banks that failed. Over 400 banks failed. Thousands of homes were foreclosed. Businesses failed. You know, if you look at what's going on, last year, 25 energy companies defaulted on their debt, and Hercules Offshore and Halcyon Resources filed for bankruptcy last year. I'm guessing that there'll be a lot more bankruptcies happening this year. And I don't think that people appreciate the extent of what's going on. If you look at the Standard & Poor's, the book value of the energy sector companies, it's setting new highs. It's continued to grow even with oil prices dropping in August of 2014 when prices started down. And I believe what's really happened is that oil companies saw this drop in oil prices as a temporary thing, a very temporary thing, and they're carrying their reserves and their inventories at full value of what they think it will be, of $100 or $110 a barrel. And when it comes to this spring, I would imagine a lot of auditors are going to force them to mark to market, and there's going to be significant write-offs, and there's going to be significant defaults and significant bankruptcies. I think that's going to happen. I think that's going to affect Standard & Poor 500 earnings. I think that's going to have an effect on the market. But outside of those areas of energy company and commodities-related companies, I think we will see very positive earnings coming through and real growth coming through. I think it's going to be, as I said last week, a very tough time for investors, but a very good time for investing. Listening to the rhetoric, the debates last night, things are not as bad as people would have you believe. They have an agenda to get elected to the top office in the country. Congressional people have an agenda to get elected. They're not going to tell you how great things are. They're going to tell you how bad things are. They're going to focus on the oil and not on the new technologies. And talking about new technologies, that is part of our program today. My guest today is the CEO of KPI, Chuck Magnus. Welcome to the program, Chuck.
Hi, Mike. Thank you. It's good to be here.
Why don't we start with your background?
Well, it's been a long time, but I've been in the industry about 20 years now, since we started a spin out from the UW. My colleague Sean Idonato and I had been working together in the Genome Project at the UW here and spun out a company, and have subsequently gone on. We've sold a company and now working with him and our sister company Kineta to move some drug programs forward in autoimmunity and chronic pain.
So let's go back and explain to the listeners what the genome is. I think a lot of people know, but it's for those who don't.
Right. Well, the genome is the underlying DNA in all of our cells that controls what our proteins and our cells do in the body. And it underlies a lot of different processes and can be the cause of a lot of diseases as well. And many of us have heard about people that have genetic diseases, but also in other areas such as autoimmunity, where we're working, there are things that go wrong in the body that cause it to attack itself. And we're just, as I was telling you earlier, we're just at the beginning of understanding a lot of these processes in the immune system. And that's a key focus of what we're working on, both to control runaway processes like we have in autoimmunity, but also to work on improving the immune function in the cases of infectious disease. And so a lot of this is controlled by these genes. There's been a lot of breakthroughs. When we were working on it back in the 90s, it was very meticulous manual work to go through and sequence DNA, and it's highly automated now so that you can even just mail away and get a copy of your genome and it'll tell you everything about your disease susceptibilities and so forth. But we still have a lot to learn and a lot to figure out in how we can deal with disease and develop some new medicines to treat those diseases. And that's a big focus. That innovation is a big focus of what we're all about.
And dealing with the genome is not easy. I once remember talking to Lee Hartwell, and he described the process of figuring out what genes do is like looking at a company, observing a company of 45,000 people, and making a job description. And the only thing you could do is look at the company when the person was missing to make a job description.
Right. It's very challenging because evolution and the biology of the system has really grown to make systems very interrelated, very redundant, and so you have to be careful when you're modifying that system that you don't break something else.
So why don't you tell us about Kineta and KPI?
Okay, well, so KPI and Kineta are both local biotech companies here that are working together in partnership on a number of programs. One of the most exciting things we're working on right now is our autoimmune program, which is led by a drug called devaluing that completed phase 1 trials last year. We had some very interesting and encouraging results in the clinic in a psoriasis trial, and have published some of that early data and continue to work on refining that. But it's really about, again, as I said earlier, it's about innovating in the industry to try to bring forward some new therapies that can really make a difference for patients. One of the themes that I've been working on and talking on for a long time and is really underlying a lot of what we're doing is how do we develop some really novel drugs that address patients' needs in a way that hasn't been done before. And devaluing is the first in a new class of drugs that uses a brand new approach to try to treat autoimmune disease without the broad immune suppressing effects that we have in our traditional drugs. And we hope that it can also be very broadly effective in addition to that across some diseases that we may not have any treatments for right now, things like type 1 diabetes or even diseases like lupus, which is a high interest of ours, where there are very few drugs to treat patients with those diseases.
I want to go back and have you define a couple things. One, when you talk about psoriasis, what is psoriasis?
Well, psoriasis is an autoimmune disease that is mainly manifested in the skin of patients that have it.
An autoimmune disease, describe what that is.
So what that is that's a disease where the immune system in the body starts attacking the body itself. And in the case of psoriasis, there are many diseases like this, but in the case of psoriasis, the skin tissues are affected by that. There's actual white blood cells in the body that attack the tissues and break it down and cause patchy, scaly, irritating skin patches. Can be all over the body and can be mild or it can be severe. But it's a systemic disease that can affect the entire body. There are many other diseases like that where different parts of the body are affected. Things like multiple sclerosis, which affects parts of the nervous system in the brain, in the nerves. There's type 1 diabetes, which affects the pancreas and ultimately prevents the production of insulin. But all of these different autoimmune diseases have an underlying common theme, which is that the immune system is attacking some part of our bodies. And that's what we're trying to address with some new therapeutic approaches.
It's almost like in a war of friendly fire, shooting your
exactly
own
like
soldiers.
It's exactly like that. That's right.
The body somehow starts to destroy part of itself.
That's right. And this is an area that there are a lot of unanswered questions. We're just really at the beginning of understanding some of these disease processes in some of these cases. But it's an area where I'm continuously running into people who have friends, acquaintances, or themselves that are affected by an autoimmune disease. And so there's an enormous need out here ranging from young kids all the way to elderly people that have these diseases. And we just don't have enough tools to fight them.
And one of the large diseases, of course, is rheumatoid arthritis.
That's right. That's right.
And that's autoimmune.
It is also an autoimmune disease. There are drugs that treat some of these that work fairly well at controlling the symptoms for some period of time in some patients. One of the things that we're working on is really how do you do that? How do you control the disease, but without causing some undesirable side effects? many of the existing autoimmune drugs that are out there that are most effective can lead to opportunistic infections. And you may have heard this when you hear some of the advertisements on TV about that.
We're going to come right back after the commercial. We're coming up to a break. You want to hear what our guest has to say? He's got a lot more. So join me for Chuck and Magnus. We'll be right back.
Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com.
Now we return to About Money. There's more information waiting for you at adamsfinancialconcepts.com. Here again is your host, Mike Adams.
So I'm here with Chuck Magnus of KPI. We started talking about his company, KPI, and the drug they have in clinical trials. So let's talk about clinical trials and where you are in the process and what the whole process is to get a drug approved.
Right. Well, Mike, there are generally 3 or 4 phases of clinical trials, depending on how you characterize it. There are usually three phases of clinical trials that you have to go through before the FDA will approve your drug. And then sometimes we talk about phase 4, which is continued observation and study of the drug even after it's on the market, with a lot of reporting going back into the FDA. Right now with our drug, for example, we've completed phase 1 with dilazatide, which is really focused on safety and tolerability of the drug. You want to make sure that in a smaller number of subjects that you can try the drug on first, that the drug is tolerable. There are not going to be some major side effects that are going to cause a problem in people before you go on to larger phase 2 and phase 3 trials, which are really focused on, does the drug do what you want to do to treat the disease, and is it worthy of being approved ultimately by the FDA? And it's a long process.
And phase 2 is usually a dosing kind of trial, right?
That's exactly right. You're very sophisticated on this, I see. So you did your homework. So phase 2 is usually dosing, really getting at, does the drug work? And then phase 3 is a much larger trial typically that is used to refine dosing schedules and administration frequencies and make sure there are not any looming side effect issues that you would see in a bigger population.
And it is in phase 3 where you have a final endpoint for verification that the drug actually works.
That's right. That's exactly right. And then that's what's used to submit that data to the FDA, and hopefully they approve it based upon that data to say that, okay, this is a drug that's fit for the mass market.
So now you've completed on one drug a phase 1 clinical trial.
That's right.
And you'll begin a phase 2 clinical trial in the not too distant future, I assume.
Mm-hmm. We're looking to start the phase 2 for dilazatide later this year and move that drug forward. And then we have a couple of other products that we're developing as well, 2 other opportunities in topical development for autoimmunity that we want to bring into the clinic this year as well. And then ultimately we have behind that a very interesting treatment opportunity for chronic pain, which is also a novel approach. And in that case, that is a class of drug we're developing that is non-opioid. So we think it will not be addictive, will not cause cognitive impact, which could be a real game changer for patients.
Yeah, because chronic pain is one of those which results many times in drug abuse and addiction.
It's a big problem, particularly if you have a chronic pain condition, whether it be from an injury, from a burn, from the fact that maybe you had chemotherapy before, or diabetic neuropathy, something like that that's caused a chronic pain condition. You don't want to be on a drug that's going to perhaps make you addicted or impact you so that you can't even go to work every day.
So would this be a drug to eliminate the pain, or would it be an ongoing administration?
Well, we suspect it would have to still be, it would be a chronic treatment, so you'd have to continue to take the drug, but we think it would be able to work peripherally so it wouldn't have to get into the brain. It would, in that way, would avoid some of these major problems with the opioid drugs, but would be able to give actual relief to the patient.
So let's come back to dilitide,
Dilazotide.
You know, the names of these drugs gets more and more complicated all the time.
That's exactly right.
So you mentioned that it went through phase 1 for psoriasis, but then you talked about it being used for other indications as well, like lupus.
That's right. So there, as I was alluding to earlier, the underlying basis for many of these diseases is the same. They're attacking different parts of the body depending on which patient it is, but the effect in the body is the same. And so we believe that dilazotide will be very broadly active against many different diseases. We've done model studies in a number of diseases, and one area that's of really important prominence here for us is lupus. We actually have a collaboration and an alliance with Seattle Children's Research Institute here in town. We're working with Ann Stevens' lab there to validate the activity in patient cells derived from lupus. And we're very excited about this opportunity because lupus is one of these autoimmune diseases where we don't have very good drug choices right now. The older drugs that are used there to treat flares in lupus are quite toxic. They're very strong immune suppressants, and we really haven't had much developed there in the past 50 years. There's been one drug approved, and there's still a lot of challenges there. So we think there's an enormous opportunity. Part of it has been caused by the fact that I think that in general the industry and the scientific community haven't really understood all of the ins and outs of how lupus develops in the body. And so we believe that we may be onto something here that could make a difference.
And it seems like you have a different novel approach because for years everybody has talked about lupus being a B-cell disease rather than a T-cell disease.
That's right. We were talking about that before the show, and I think that's one of the areas, again, we're trying to be very innovative and distinguished about here because our drug targets T cells, which are a different kind of white blood cell in the body, but the prevailing wisdom has been that lupus is caused by B cells for many years, but the reality is there have been many B cell directed therapies that have gone into clinical trials but haven't succeeded. And so maybe it really is time to revisit that. I think there's a lot of openness now in the community to look at T-cell therapies as an opportunity in lupus because the B-cell approaches haven't worked.
So let's go back to the trial was for psoriasis.
Right.
And then you move into lupus. What is that process that you go through to get phase 2, phase 3 approval and to be able to address lupus with that same drug?
Well, so because really phase 1 is about safety and tolerability, these early studies have been focused on that. We've been very satisfied with the results we've gotten in our subjects with phase 1 for dilazotide. And I think that's the first and most important barrier that the FDA, for example, would look at in working with us to move the drug forward into phase 2 and phase 3. Beyond that, this is part of why we're working with Ann Stevens and her group at Seattle Children's, because she is a rheumatologist that treats lupus patients every day, and we're trying to make sure that we have all the sort of background there that would justify that moving into those patients in that area. And so the next step would be to run a phase 2 trial in lupus patients and get some proof of concept data, as we say, that the drug can be effective there, much like what we saw in our psoriasis trial that we've already completed.
So would you run just the lupus trial, or would you run 2 trials, one with lupus and one with psoriasis?
Well, we probably would select just one because, and this is commonly what's done, even though most autoimmune medicines that are being developed out there ultimately do get approved for multiple diseases because of the commonality of the underlying process in the disease. Usually there's one or two related areas that are approved first, and then the developing companies will come back and develop that drug for another disease area by running other clinical trials. But you do have to show in each type of patient that the drug works ultimately to be able to market it for that disease. So because of the cost, the time, and so forth, it's it's oftentimes, it's just practically has to be done in one leading indication at a time.
That's a fascinating thing that you're doing.
Well, thank you. It certainly is, and there's certainly a huge need for it, and I think that's why we're always happy to come talk to people about it and get the message out, that it's a complex process, but you have to start with the innovation and move through this process to get these drugs out there to help people.
That's great. Thanks for being on the program. Thanks
pleasure.
for the information.
Yeah, thank you very
It's
much for
very
having
important
us.
what you're doing.
Anytime.
We look forward to a great deal of success.
Okay, thank you.
Thanks. So, 40 years ago, China was an agricultural society. Today, it's the second largest economy in the world, second only to the United States. To understand what happened is important to understand that development, why it happened, and how that's impacting what's going on today. There's a parallel to what happened in China over the last 40 years. I've compared in previous programs a comparison to France under Louis XIV, beginning in 1661. France was close to bankruptcy. They were an agricultural nation that fought 3 major wars and 2 minor wars. Back in those days, you didn't have paper money. You had gold and silver, but France didn't have any mines. So they needed cash, and the way you generated cash was a trade surplus. So Louis XIV, Louis XIV, brought in Jean-Baptiste Colbert in 1665 and commissioned him to change France into an industrial nation, essentially, or a craft nation, a long time before really industrialization. But the French industry was mainly small crafts. It was pretty backwards, and they really couldn't compete worldwide. You can almost call that China 40 years ago. So France began to build industries. In their case, it was glass and textile, which were huge industries of those days. China today is building steel and aluminum and aircraft and ships and copper, and they're really moving into the heavy industry. That was the Chinese party that decided to do that. And to do that, in the case of France, they restricted imports and they focused on those industries. We're coming to a commercial break, and so we'll come back to talk about the development of China and how it's impacting us today. Don't go away. We got more to say.
More about money coming up with Mike Adams on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Lots of people manage investment portfolios. Just a few can manage a successful portfolio and provide exceedingly great service to their clients. Here's Mike Adams from Adams Financial Concepts.
We believe the price you pay should be based on the performance of your portfolio and the quality of service you receive.
Mike, it seems that a lot of companies subscribe to the one-size-fits-all mentality of investing. Does one size really fit all?
Not with us. Every portfolio that we manage is customized to fit each particular client's objectives and risk tolerance. We place our clients' interests first in all portfolio decisions.
If you're looking for a home for your 7-figure plus investment portfolio, call Mike Adams of Adams Financial Concepts, specializing in creating and maintaining wealth for over 20 years. 206-903-1019. That's 206-903-1019. Or log on to adamsfinancialconcepts.com.
About Money continues. Remember the website adamsfinancialconcepts.com. Here's Mike.
So I've been talking about China, started talking about China, an agricultural nation 40 years ago that's grown to the second largest economy in the world. And they patterned that, whether they patterned it or whether they just developed that way. There's an analogy to Louis XIV with Jean-Baptiste Colbert, who he brought in to build France into a powerhouse. China did many of the same things. They actually went out and, in the case of France, they poached craftsmen and entrepreneurs from other countries. In the case of China, they formed joint ventures, offering, in both cases, highly attractive incentives. Boeing just signed a deal with China to furnish. China is buying 300 Boeing jets. That's a huge amount of money, huge sale for Boeing. But in order for them to do that, they had to do a final assembly of those aircraft in China. And the only part they do is the interiors of the aircraft. The rest of the aircraft is all done in the U.S., except for some of the parts that come from other parts of the world. But they don't do the final assembly of the aircraft itself. Airbus signed a similar deal, but in the case of Airbus, China got them to actually do the final assembly in China. Now, if you look at how that works, China put in high-speed trains, and they did joint ventures with Japanese companies and Dutch companies. And then China came out as other nations were looking at high-speed trains. China became a competitor of those companies, the Japanese company and the company out of the Netherlands, and they said they made some improvements, but then they considered the technology theirs. I mean, that case is winding its way through court because those companies sued. But China took that technology, they learned, they took it, added a few things to it, and called it their own, and now compete and actually compete at lower prices. That was the same kind of thing that they did in France. France built factories, something that had never happened in France before. Factories of 1,000 people. It was new in France. They paid a minimum wage. They built dormitories. In China, look at the factories that have been built for steel and aluminum, for shipbuilding, for all those heavy industries, and aircraft. They do a huge number of 747 conversions from passenger configuration to freighter configuration. They started by taking a duck pond and leveling that and building over that and building dormitories for people. They started doing several aircraft, and now I think they do as many as 10 or 12 or 14 at a time. They started employing a few hundred people. They employ something like 15 or 20,000 people, or they did until things slowed down. They build entire cities to support the factories. That was mercantilism. That's the way that the Communist Party was able to do this. They control the land, they control the economy, they control the military, they own the banks, and they have a foreign policy. And the Central Party decides what's of major importance. And to them, heavy industry and steel, aluminum, and aircraft, those were really important things to do. And they had all these contracts out there that looked like there was a huge demand for steel, a huge demand for aluminum, for aircraft. And they wanted to build, and they did build. And now there's an overcapacity. The demand didn't go away. There was never that much demand to begin with. And that overcapacity is now impacting China. The speculation is that China is now selling steel at 10% less than what it cost them to make it. I mean, there could be some filings to file against China for dumping. That's what dumping is. But China, in order to accomplish that, has and move things out, took a devaluation of their currency. And contrary to what was said in the debate last night, if the Chinese currency is allowed to float, it's not going to increase, it's going to decrease. China is supporting their currency. They spent over $100 billion in the month of December to support the currency. They've got $3.4 trillion in foreign currencies, in foreign currency reserves, but they spent $100 billion to try to support their currency. But even at that, it floats down. And there's any other country that's tried to support their currency has found it's impossible to do. I'm sure that that's what the Chinese will find. Before, they pegged their currency to the dollar, but in the real market, it's down. And I would guess that it's going to take another devaluation. And it's not a short-term problem. There's significant overcapacity. It's a benefit. For me, it seems to be a huge benefit for U.S. companies that are producing in the U.S. because they're able to buy things cheaper. They're able to, in some cases, buy things cheaper than it can be produced. It's a benefit to consumers because consumers are going to get the benefit of lower prices. It's, when China devalues their currency or another country devalues their currency, we get to buy things from them and it's a cheaper price for us. Look at what's happening in Canada. There used to be a premium to their currency, the loonie, and now it's a 70% or a 30% discount to the U.S. dollar. That's a benefit to the U.S. consumer. That will continue to be. The question is, how long will it continue? Will they take the Japanese method? And my guess is that they won't go completely like the Japanese did. But on the other hand, it's the central party. In Japan in the 1990s, had the second largest economy. Remember back in those days, it was the Japanese way. Manufacturing methods were the Japanese methods, the just-in-time arrival. They were held in high regard, just like China has been up until these days. But when the real estate crashed and the banks didn't deal with the actual crash, we dealt with it. We closed banks. We foreclosed homes, and it was difficult. Businesses died. But the Japanese banks didn't do that. They tried to work it out. And it's been 26 years of economic hardship. Think about the Nikkei average. On 12/29/1989, it hit 38,957. This week, it's at 19,000. We're almost 30 years later, and it's half of what it was in 1989. The question is, will China work through it and take the actions they need to take? Or will it drag on like it happened in Japan? There's not a short-term solution. And it's one of those things which I think is a positive for the United States. But until the markets realize it, we're going to go through this turmoil like we've gone through the last couple of weeks. I think it's being in the right place to take advantage of the positives and not to worry about the negatives. I will be back next Friday talking more. And if you missed part of this, you can check it on the website. This will be mounted on the website under a podcast. You can also catch it on iTunes. You can also like us on Facebook. Like About Money. You can like me on Facebook. Adams Financial Concepts. You can pick us up. We tweet about during the program and about what's going on. You can do all those things. Just sign up. About Money. You'll find us on the website, www.adamsfinancialconcepts.com. And until next week, have a really great week.
You've been listening to About Money with Mike Adams, a registered investment advisor. If you'd like more information about what you heard today or about Mike's investment philosophy and strategy, or if you want Mike to evaluate your own portfolio, click on adamsfinancialconcepts.com. That's adamsfinancialconcepts.com. The information shared on the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again next Friday afternoon at 3 for more About Money with Mike Adams here on Business Radio 1300 KKOL.
The preceding program was sponsored by Adams Financial Concepts. Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's Adams Financial Concepts.